Good afternoon, goons. Welcome back to another episode of Jack of All Trades. Here with Kaylin and Sam as always. And I'm going to do a little TA to start off just because Kaylin did one last episode and I couldn't help but see some interesting things. And then I just want to finish off with a couple news reports that came out recently. One about the Fed staff being the crooks that they are trading during the pandemic before news came out. And then it's about Canadian housing, something that I've quite opinionated about. But let's go back to the TA. So Caitlin, last time you were using just like support and resistance, right? And you were able to find all these levels. So like,
Mhm.
I just want to show you some cool, funny things about the Fibonacci stuff that I like. So one of the things I like is the Fib retrace tool, and usually you pull from the highs and you pull to the lows of a swing, and usually you'll see the pullbacks will try to target the 618 level is usually where it wants to go. It's there 63, 66% of the time. So it usually will pull back from the lows to that spot, but 50% is a pretty nice level too. And you can see like how cleanly it hit that. I pulled it straight from the top to the bottom and how cleanly it turned around at the 50% level. Now the question is whether or not it'll bounce at the 236 and then approach this. What usually happens is if it hits the 618 and it breaks it, that's a reversal. Then you can expect to go higher. If not, then it's going to continue to go lower. So I just thought it was pretty interesting that lines up so perfectly. And then another thing that I like to look at is the fib extension. Not a lot of people use this because it takes a lot of experience to know how to pull it. But if I pull that, again, you see it hits the 618 level. So the fib extension tells you that based on the percentage move of the first swing, it'll guess where the second swing is going to be. And it's usually 618 level. So if this was like if we go back in time, so let's say about here. How do I do this again? If we go back in time to about here, and I pulled this tool. So I assume like, okay, that's the swing. I'm like, okay, then we have this little move about 23% down. Then you could play that. You could short it, you could, or I would just catch a knife, but then you watch that, happen in real time. Boom, boom, right? Bounces. It's just funny how that happens. Like right now it's turning around to 618 again. Like these, I don't know what it is, but the Fibonacci just exists in nature and in this as well. And I could pull this stuff all day, right? So it's like, so what I did earlier was I could pull it from the highs to the lows, and we saw that it turned around at the 50, right? I think if I do this, if I pull it from low to the high, we're at 50% again. So again, my target is going to be here. So my buy zone is probably going to be about here. That's where I would try to catch a knife and bounce.
It's funny,
Yeah,
you could almost use that in two ways. Like I think when you pull it like from the very high to the very low, that's almost a way that you could use it to short it because that
yeah,
kind of tells you where your overhead resistance is. But when you did the what was the other one?
yes, that's
The
right.
Yeah, so if you
So
did that, you could kind of use that as like as a short tool.
short, yeah,
And
yeah,
then
yeah, yeah.
the other one you could use as your dip buy tool.
The extension, yeah. So if you
Yeah,
know where to pull it, that's why I would target this area right here.
yeah,
But I'm
that's cool.
conservative, so I targeted this area. But like the 618 number is like a freaking magnet. It's just and it happens on like multiple time frames. I just thought that was interesting.
I just find it so funny when you do these things and we both always find like the exact same levels and we use completely different methods of technical analysis, but both of them are simple. Like you
Yes.
literally use like basically one indicator and I pretty much do the same thing. Like we both use support and resistance and then we both use like some sort of an indicator. Like you use the Fibonacci and I use volume pretty much.
Yeah. I think we both have like that one primary indicator we use to kind of like base our decisions on or like let us know like maybe we should look into this more. And then maybe a few auxiliary indicators we use to kind of like this for confirmation, right?
Yeah. Yeah. I love. It's just so fascinating to me, like how there's so many. Like you listen to people train, like, oh, my way is the best, my way is the best, or like they have all these different indicators, or like a lot of the people might be right. Like if they use certain moving averages or crossovers or Fibonacci's or support and resistance, like they can all work as long as you know how to use them, right? It's just like whatever works best for you. Like I personally don't use Fibonacci at all. Like I've
Yeah.
played around with them a bit, but like it just didn't work for me personally. But it's funny because we've spoken about this before. We both bought this stock within like $2 of each other,
Yeah.
and we weren't talking about it. We hadn't talked in like a week. We just happened to message each other that day and be like, "Hey, I just bought some of this," and we're like, "Oh no way,
Oh,
so
me
did
too.
I." And like we were within a couple bucks of each other using completely different indicators, like
Yeah.
during a big crash, and we both basically got like almost at the bottom. It's just like
Yeah.
I just find that so funny.
I think the main thing that's is like probably because whatever our methods are, it's simple, it's clear. There's no mess. I've seen a lot of guys will they put like 50 indicators on their chart. I'm like, I don't even know which one to trust anymore. They're all
No,
telling me something.
it becomes contradictory, right? That was my problem. I think everybody does that at the
Yeah.
start. I think, okay, well, if I have one indicator, then it shows me, like it shows me this. But if I have two, then it's twice as right. And if I have three, if I have 10,
Yeah.
then it's like if I have like 15 of these things and they're all lining up here, then like I can throw my house on it, right? But it doesn't really work that way because like whenever I try to do that, I always found myself contradicting myself. Like
Yes.
I'd look at a support line, but then it would be like under a moving average, and then it was like, oh, okay, well that doesn't really, well then no, that doesn't work. And then, or like I would look at a Bollinger Band, and then it would be like somewhere else that doesn't work with the Fibonacci, and I'd be like, okay, well one's telling me to go in and the other one's not, and like I just ended up never making trades or just getting scared out of stuff really fast because like I'd kind of like half get into something, and then if it like fluttered a little bit because it was wrong the other indicator, I'd just bail out of the trade and panic and lose every time. So that's when it is. I just kept it super simple, and I just love that we both have like really really simple like
Yeah.
methods that
$100%.
we can teach people in like less than 60 seconds how we do what we do.
Yeah, 100%. I think keeping it simple is so clutch. I mean, if you have 50 indicators on there, like, and it was wrong, how do you know which one was wrong?
Yeah.
How would you know?
Well, I just like to point out too, like you don't even have any moving averages on here,
No,
right?
I hate moving averages.
Exactly. Like, it's one of those things where it's like, the things that everybody's talking about, it's like, okay, well, like moving averages by nature are lagging indicators too. Like that's
Yeah.
that's kind of like the first thing that everybody jumps on is the moving averages. So like the only reason that I use them is just kind of like for like a confirmation. So like if I don't look at them when I make a trade, but if I'm already in the trade, I'm like, okay, this is kind of the area, and then a moving average kind of like confirms it, and then it's like, okay, yeah, like I'm really right now, like it just gives me a little bit of extra confidence, but that's about it.
I've got a basic one. I think it's a stock one, the 50-day, 128-day, 200-day. Is that yours?
I think I have the 50 and the 200 on mine.
50 and 200, right? Like, I
Yeah,
look at this, I'm like, this just annoys me. It's just shit on my chart.
yeah, I know. And it doesn't even really work that well. Like it kind of like it goes through it quite a bit, and like yeah, it's just messy. Like I don't know, but like it's nice to use them as like a general indicator because like if you saw it like go below a moving average and like reject off of it from the bottom, then it's kind of like okay, and like if you combine that with it being below like a major resistance level, then it's like all right, this is probably pretty bearish or whatever. But like yeah, on the whole, it's just I don't
So,
you just got to keep it simple. Like it just has to be something that's really, really simple to look at. And horizontal is always the best. Horizontal lines are always the best.
yeah. You ever what was that? What's that? Do you know that the moving average indicator where it's like the cross or whatever the hell, where the 200 crosses the 50-day and then it sells off?
Yeah, and like
Like
by the time it actually crosses, it's already bouncing, and that's
it,
supposed to be like your kiss of death.
this is 30 days afterwards. 30 days afterwards it crosses. Like and you're already like down like how much percentage? You're already
But
down
that's
like
what I
14, 15.
but that's what I mean though, right? Like if I was to play that, for example, if I shorted that and I was holding it, and then 30 days later that cross happened, then it'd be like, okay, like yeah, I was right, even though I'm already very right because I made the trade 30 days ago, right?
If you made the trade the day of the cross, you missed half the move.
Yeah, yeah. And like I've seen a million times, like because I looked into these a lot. I've seen a million times where like you get those crosses, and right where it crosses is the bottom, and then
Yes.
it bounces up after that, right?
Yeah. Like it's not just a lagging indicator. Because it's an average, it's a really lagging indicator.
I know. But I don't know how we got on that tangent of just shitting on moving averages, but
For those that are successfully using moving averages,
yeah,
you know,
kudos to you because I can't do it. I lose money
yeah,
every time.
yeah. But yeah, let's. I just wanted to go touch on that real quick. Maybe the tip of the day is like to keep it simple. If for no other reason than to figure out what is not working, because you just have one indicator there. If it's
Yeah.
not working, you'll.
I think anybody
So
that's starting out, you really just need to pick like one indicator. Like just pick one thing to look at and just practice it with whatever type of trading you're trying to do. Just like fumble around with it, make mistakes, see if you can find something that's consistent, and then if you can, keep using it. If you can't find anything that seems to be working, try the next thing. Because like I said, me and David, we both know how each other trades, but neither of it like I don't use David's methods to trade, but we end up in the same place anyway. So that doesn't mean that either of our methods are better than one another or one's worse than the other one. It's just whatever works for your personality. And we've both found what works for our personality. We've both tried each other's methods and we kind of latched onto one specific thing. So that's kind of why you really just have to play around. Like my trading style is not for everyone. David's isn't for everyone. There's hundreds of different ways to do it. So until you start just trying them, you won't really know what you like.
I just want to. Well, I wonder how your learning curve was like, just real quick. Because mine was. So I got to the point where I found a few indicators that I liked, and my charts were just plastered with them. I think I had like 4 or 5 indicators on there all the time. And then what I did was I started getting annoyed. So then I started stripping them away till like there's like 2 or 3, and then I'd use them for like a period of maybe 3 to 6 months, and then I'd swap one out and use it for another period. So over this period of like maybe 18 months, I was swapping indicators out back and forth. And at one point, I did have moving averages there because my thought process was I don't use it, and I think it's useless, but I know other people do. So it'd be nice to see what they're looking at and see if they're gonna but then I realized that like it was also redundant because it's the levels that I'm looking at without it are showing with it. So I'm like, I might as well just get rid of that too.
That's
But that,
kind of similar to me. Like I just started like my problem was when I first started, I wasn't giving enough attention to things for a long enough period of time. So it wasn't
mm,
until I got like further down the road when I was like, okay, I really need to focus on just this for 3, 4, 5 months and really see if it works. Like really see if this pattern works. Like I started off looking at like the pattern of the actual chart. So like flags and head and shoulders and breakouts and breakdowns and like all those kind of different like when you Google like what's a stock pattern, all like the generic picture you get on Google, like that's what I started looking at. So like when you look at a setup like we were just looking at there, where you just kind of get this big bounce and it rolls and it sells off and it bounces off that level, like that's not really a pattern that you see if you're just like Googling stuff, and like it doesn't exist. But it was after a long time of trying to make these patterns work and make these patterns work, because what they don't tell you is like, okay, you're looking at this little snapshot of a stock pattern, but that completely invalidates everything that happened before it, right? So like, is this little chunk of the pattern happening in a bear market? Is it happening when the stock is selling way down? Is it happening when the stock is breaking out? Is it happening just below a major breakout level? So maybe if it breaks out, it's going to get rejected, right? Like there's all these extending factors outside of that time frame. So it wasn't really until I don't want to say I ignored patterns, because like I do have specific patterns that I like, none of which you can find on Google, by the way.
mm,
Um, but there is specific patterns I like. But like the main thing is really just support and resistance lines. Like I don't care too much if I see a head and shoulders. I don't care too much if I see like a bear, like a flag or a pennant or any of that stuff. Like I'll just kind of look at it and be like, okay, well, if it breaks out or breaks down, this is the air, like this is the line where I'm going to buy it or I'm going to sell it. I'm not looking to play those generic patterns you find on Google. I'm looking to play off of major support and resistance lines. And it wasn't until I started really only focusing on just those major lines and almost like ignoring the patterns to a certain degree, that's when I really started to become profitable.
yeah, I got deep into the patterns for a little bit, the traditional chart patterns, and I kind of like the same thing. I stripped away a few of them until like the only ones that I automatically see now is a rising wedge because that one's like red alert, and I still see that all the time. It's just like
Yeah.
it's a sign to sell. But yeah, in terms of like play the breakouts, this is a pet like all that stuff. I'm like, fuck it. And I
Yeah.
laugh at people that call it for head and shoulders. I'm like, shut the fuck up. Like, okay.
Oh, yeah, yeah, yeah. But they can work though. I think it depends how you play them, because like if I see like head and shoulders for me are great short setups
Mm,
once it's already happened, if that makes sense. So like if I see a head and shoulders, I'm not going to try and play try and like anticipate the breakdown. I'm gonna wait until it breaks that shoulder line, comes down, and then I'll hit the bounce because then I know that the play is already confirmed, right? So that's where I'm gonna get in with big size because I don't want to try and anticipate it because until I actually see the whole pattern play out, I don't know if it's a head and shoulders. Like it might just be a small bounce and then a big bounce and then it might just keep going up, right? Which isn't a head and shoulders.
You know, the Head and Shoulders thing, like I get it because I'm reading because like so this was the Bitcoin Head and Shoulders. Let's see if I can do that. So that was one shoulder, and then people were saying like this was the head,
Yeah.
right? And then so like everybody, and this was last year when I made a ton of money and when I called the bottom, like everybody's saying, "Oh, we're building the right shoulder, we're building the right shoulder." I'm like, yeah, but if you actually look at the pattern, like if you equate, excuse me, if you equate price movement to emotions, then this was a strong emotion, straight line up, straight line down, fear, really strong, right? Here you start to see a little this jaggedy shit, which means people aren't sure what's going on anymore, right? So in my mind, it's like if you're reading this in terms of emotions, like it went from strong to not so sure to I don't know what the fuck is going on. So don't
Yeah.
tell me a head and whole shoulders like what you really want to see is like a straight up and then you know the straight down's coming. Like that's
Yeah.
acute, you know?
So for me, like, because that was actually the last time that I tried to anticipate it, and I played it really small because I
Oh,
was just like, okay, like we'll see, right? So like I didn't love it to begin with, and like I don't play
right.
Bitcoin very often, so I don't really like have a good feel on how it works. But you're right because like even at the top through the head, like
Look at that.
you kind of had this choppiness all the way through, and then same thing on that that right shoulder. So like when I was looking at that, I was like, okay, I'll take a small position, and then that way, if it breaks down, then I have a bit of a higher position, right? And then it ended up we kind of had that like false little breakdown, and then it bounced straight back up. So like, I think I took like a couple $100 loss or something on that, like, really small size. But that's kind of what I mean. Like what I was just saying there is with the head and shoulders, for example, like what I would play now. Like I don't do this anymore because it didn't work. But what I would do now is wait for that to fully break down and then hit that next bounce because now I know the chart has shown me that yes, this is a head and shoulders. Yes, it's broken down. Yes, it's bearish. So once we get that first relief pop, I can short that and I can cover it in the next wash, and that's the play that's going to work every time.
You're saying if it came here?
Yeah. So if it broke down like that, then okay, now we're confirmed. Now we hit a bounce up into that resistance level, and that's the play that I would take all day.
Yeah.
So like
Even though
that's kind of how I use the patterns, right? Like I'm not gonna anticipate it. I'm not gonna anticipate a breakout. I'm not gonna anticipate a breakdown in this type of a setup. I'm gonna wait for a confirmation and then I'm gonna get into it because then the chart at that point the chart's already shown me that it's breaking down, right? As opposed to hoping essentially that it breaks down. I want to know that it has broken down and then I'll take a position on it.
so let's do a little. I think probably for beginners, this might be a little advanced, but like for you and me, it's probably like breathing air, but reading the volume. Because I remember distinctly on this day with this volume candle, I called capitulation. And I remember I tweeted about it, like this sell off and this reversal,
Yeah.
pretty strong volume, right? But like it didn't. And when I call capitulation, it's like it still goes down. I'm like that's exactly what I expected. I mean, there's still going to be holdouts trying to sell, right? But look at this volume, like nothing, like
Mm-hmm.
nothing, right? And then you have all these shorts that got busted. It was confirmed. Like I don't know how many. It was like $400 million worth of shorts were just all got blew out of the water from this move.
Yeah.
Like
Those are the worst too, just like those slow, steady grinds. Because like those are the ones
yeah,
that you just keep
tick, tick, tick,
adding and
tick, tick, tick,
adding
tick,
and
tick, tick.
adding, and you're just like, why won't this thing break down?
Yeah,
Yeah, those are the
that
worst.
got this got me once. The last time I ever blew up an account, it was one of these. It was from
Yeah.
Bitcoin. Yeah,
That's why it's so funny. Like when like when we talk to people, when we tell them like, we like you like catching knives. I like huge spikes into resistance levels. Like, the stuff that looks terrifying if you don't know what you're looking at. Like it looks like how can you possibly comfortably take a position on that? It's like, well, because I know it's such an explosive move that it's gonna reverse, it's gonna bounce, it's gonna do what it's supposed to do, right? Like you gotta have those quick emotional moves. You don't want
well,
those slow, choppy, like you basically you don't want people that are trapped to be able to get out of their position. That's
yes,
really what it comes down to. You want the people that are trapped to be fucked. Because when that happens, that's when you can make money.
Yeah, you gotta be a bit of a shark. You gotta be a bit of a shark.
Yeah.
Look at this. Look at Vimeo. It dropped from that day to this day, 30%. One day to the next, 30%. And I caught the bitch right here, 944. We got strong volume too.
Yeah. That's a huge volume.
I think all I did was this is the wrong chart. I can't remember which chart. Is it long term? Uh, I forgot which chart I did. But I literally drew, I think, either a channel or a line, and that's the only reason. And that's the only thing I used to find that spot. Sorry, I'm just gonna check this real quick. I can't remember what I did. I remember drawing the channel. Whoops. What I do? I remember drawing the channel, and I can't remember how I got the $9. I might have used a fib because I remember it broke down the channel resistance, and it broke down. I was expecting that rejection, and somehow I got. Oh, here we go. Yeah, it was a fib. That site's messy, but anyway. Anyway, I figured it
Literally what
out.
we were just talking about. Just keep it super simple, like one line.
Well, technically, it's only three things, right? It's one channel, two channels, and a fib, but it just looks messy because it's a lot of lines.
Yeah, I know.
Well, and a range here and two arrows, but still.
And some
But
volume,
anyway,
some
but anyway, I
RSI.
wanted to moving on. I wanted to just to do this Fed thing, like just laugh at it real quick. Like, so it just came out Wall Street Journal. Fed staff reported securities trades amid banks' 2020 stimulus moves. So get this fucker did 46 trades on February 27th and February 28th. And if people remember, March, do you remember what the exact date it was? March 2020 was the crash.
Yeah. I think it was right at the end of February. I don't know. But yeah, right around there.
Um, weekly. Because this is like February 18th. Was it the crash?
Yeah,
Yeah,
that was
February
right,
18th.
yeah, right at the end of February.
Holy shit. So amid, oh, wow. Okay, here we go. So he sold like right at the beginning, right there. And he missed the rest of the 27% move on the S&P. Like, so he must have known, like, if I sell here, I'll buy back here. We're gonna issue some stimulus and then ride this thing up. Like, what is this? Ride it up 50%. He sold $1 million worth of the iShares MCI. I think that's quality factor exchange traded. I can't remember what fund that was, but sold $1 million worth.
Yeah, people want politicians, man, because you just get all the good stock info.
Oh, look, he bought half million to 1 million shares on March 18th. Do we dare look and see what was going on March 18th? Was that near the lows? That was wow, that was near the lows right there.
That's where he bought.
Yeah, March 18th. That needle, this little that wick, that's the day that he bought. 18th.
Man, this guy
I
needs
mean,
to teach me how to trade.
just get a job at the Fed.
Oh, dude, I'd be retired in a year if I knew what these guys knew.
Like, how is this not illegal? Like, the people from the
Well,
SEC shouldn't be able to trade.
they're aren't they like working on passing a bill that like anybody in the government can't trade or like senators or something like that?
Yeah,
But it's funny
but
because like I don't like for whatever reason Nancy Pelosi is like the one that everybody latches onto. Like all the
yep.
meme stock guys, like they all latched onto her for whatever reason. There's a ton dozens of these people like that do this stuff. So it's not just her. But
Well, it's because her husband apparently runs a fund or something.
yeah, that's but the funny thing is that like it doesn't inhibit their spouses
That's
from trading,
yes,
right?
right.
Which is like, I mean, so like it was funny because I remember the start, she was like super against it. And then now she's like, oh, yeah, we're like, yeah, we think this is a good idea. And it's like, you read the fine print, it's like, but their spouses are still allowed to trade. And it's like, okay, so I'll just come give you all the juicy information. I'll give you all my money and you can just trade for me. So sure, let's pass this bill.
So what's it? Senator Warren was trying to call for an investigation of the Fed,
Yeah.
potentially legal. Congressional Democrats, meanwhile, are pushing new rules to restrict trading by legislatures and judges.
It's been happening forever though, man. It's just the way the world works, right? Like it's been happening for hundreds of years and all different variances and all different types of societies. It's just you have the big businesses, you have the big money, you have the politicians. They work together. Like anybody that doesn't see it, I mean, it comes that you just follow the money, right? You follow the money, and you know what's going on. It's not. I think the only reason that this is like really coming to fruition now, honestly, is just because of the pandemic and because of the stimulus checks and because so many more people got involved in the stock market. There's just more people that were exposed to it because like if you talk to anybody who's been investing for 20, 30, 40 years, like talk to anybody who's in their 50s and 60s, like mention this kind of stuff, they're just like, oh yeah, yeah, no, that happens all the time. Like it's normal. Like this is just what happens, and people get all riled up about it and like, oh, why aren't these people arrested and why aren't they in jail and this and that? And it's like it's never gonna happen. It's like you can get frustrated all you want, but this is unfortunately this is the way the world works. Is the people that are up at these levels get all the information. They work with the big companies. There's payments floating around. People are getting information, and it's just the shady side of the government. One of the many.
Flip side that might be good for us is because of such leakage of secret news is that we can kind of see it in the markets days before something happens. Like the stock prices start to trade a little funky, and then you're like, oh, something's happening there. Most of the time, you don't know if it's a sell off or like a rally, but you know something's going to happen.
The problem is it's hard to see though, right? Because like unless like I don't know, pick a COVID stock, one of the like Moderna, for example, like something like that, right? Like a lot of these politicians bought like a whole whack load of that like before the vaccine came out. Like shocking, right? But like, how do you know that, right? Like as just like a person like me or you, like what are we going to do? We're just going to sit there and monitor this one stock like every single day for months and months and months and just be like, okay, there's something a little bit weird going on now. So like that must be all the government politicians buying in. They must be going to announce something in a couple days. Like, how do you pick up on that, right?
No, I don't mean like that way, but I mean like just like not even politicians, but like it just shows that there's a leak of information throughout all levels, right? Even within companies and insiders and whatnot. And it's like if you're trading a stock, especially your small caps, it's so sensitive to news, right? You
Yeah.
can probably like make some moves, like or like at least protect yourself, like you know something's gonna happen, right?
Yeah. Yeah, that's true.
But you're right. The system's never going to be fixed as long as the people making the rules are the people breaking the laws. So it's like,
Yeah. Well,
right?
it's just because like the government doesn't run the country, right? Like big businesses run everything, right? Like that's just the way that the world works because that's where the money is, right? The money, like for thousands of years, money has been power and nothing's changed. So like big business are the ones that implement everything. They're the ones that make all these things. They're the ones that are supporting politicians' campaigns. They're the ones that are funding all these things. Like
Both parties.
exactly. So that like that's never changed. So like the politicians having this influence isn't going to change either because you have like I can't put words in anyone's mouth, but like you have situations where you have big businesses. They want to implement something. They want to do something so that they can grow their business. They give some information to politicians so they can pass bills. Everybody's happy. Everybody makes money. Stock market goes up, so even guys like you and me who are invested in these companies, we make money too. So I mean, like, do you complain or do you just ride with them, right?
You play the game. Once you know the game, you play the game.
Exactly, right? So like all these people that are complaining are just saying, "Oh, they're making so much money, they're making this." And it's like, "Yeah, okay, like sure they had the news sooner than we did. Yes, they're probably making higher percentages than we do, but if you just pay a little bit more attention, you can take advantage of that. Maybe you're not going to make the 50% move, but you could probably make 30%.
Yeah.
So, I mean, do you complain or do you hop on with them?"
All
But
right. Let's want to wrap it up here.
yeah, sounds good to me.
A little talk on finances and mentality to help
Yeah, I
people out.
went on a little bit of a tangent there, but that's all right.
Yeah. Fucking Fed. That's what started it.
Yeah,
All right,
I
goons.
need to be a politician, man. Then I'll be rich and I can retire.
Hey, I will be your manager. I will be your campaign manager if you do that.
Oh, there you
You get
go.
to
Start a
get to look
business.
for
I'll be a politician, and then we can both get rich. And
it. Start a crypto exchange.
yeah,
You just make sure I'm the only one licensed to operate in Ontario. We're good.
okay, all right, we can do that.
All right, goons. Take care.
All right, later, guys.